Hello and good morning out there, traders. Welcome to the Daily Market Insight for Apteros Trading. It is the first day of 2024. It is January 2nd. We're going to dive into our last trading day in 2023, and then we'll update our levels for today. So taking a look at what was going on December 29th before we kind of broke for the holiday, it was a really interesting session, and actually one of those sessions where we had really solid DMI understanding around what was going on within the context of the ES. We had a bearish level, which was our main scenario. That was scenario 1, and we were paying attention to how that level behaved early in the session. Whenever that level started to hold and started to break down and really got below this neutral level, it was kind of the all clear for shorting into this target area. We stabilized around that target area a little bit, broke it down even further, heading into our lower line in the sand here for the bullishness that we are looking for coming out of this area. We had a couple of nice inflections with some decent, little moves coming out of it here, and then here actually coming up into our first neutral target area, and that's kind of where we stabilized off for the rest of the session. So this is one of those scenarios where we kind of caught the high and low of day on either one of, or either side of our lines in the sand, and it's just part of our natural framework and context, understanding where markets are and where markets are likely to go as the context evolves over the course of multiple time frames. So that's what we do here. If you're interested in it, we have courses and education on it. But for now, let's update our levels for today and let's get 2024 started off with a solid read on context. Okay, so here we are taking a look at the first day of 2024. It is January 2nd, like I said earlier. Let's get into our scenarios and ideas of what's going on here on the ES. First big overall picture is that a lot of our timeframes have started to switch to being more bearish in nature. So that's kind of the main idea of what we're looking to capture today. Maybe get on board with some pullbacks and get on board with some bearishness in the session. Now, what's interesting about today is that we're actually coming back into a lot of value and distributions and things like that in this general area between the 48.33 area and the 47.67 area. There's a lot of interesting structural references around this zone. So we're coming back into some accumulated value in this market. But what's important to us is how we've shifted on some time frames to the downside, which we haven't seen in a very long time. So our first line in the sand here is going to be a bearish reference, and that's going to be around the 4,800 level. And what we're looking for there is that's the current what is picture. And we're looking for scenario 1 being that we come up, possibly inflect and hold that, coming back down into test this neutral reference, then maybe even continue down to this lower neutral reference around the 47.67s. Now, the 47.67s neutral reference, this is an important overall reference to the ES for the downside. If we actually clear this out, in other words, continue to the downside here, we have a decent amount of open space heading down to that 47.26 type zone. So that's kind of what we're looking for there on the overall downside. If we don't get that full pullback back to our line in the sand area and we just kind of like turn over for whatever reason and we start clearing out neutral references, this lower neutral area is going to be the spot where you'd want to pay more attention if it broke below it. If it holds it, then it's, like I was mentioning earlier in the overall context, it's going to probably stay more up in this zone here between these two neutral areas in general. Now, taking a look at our upper line in the sand, similar idea of what's going on with our lower line in the sand, we are bearish in that area as well. So with our lower line in the sand, scenario 1 is that we hold below it. If we break up above it, there is a possibility to scalp back up into our upper line in the sand here. That would be scenario 2 off our lower line in the sand. Now, if that occurs, then we get up into this upper zone here. We monitor that line in the sand for the same type of situation that we're looking for. To the bearish side of things. So scenario 3 would be holding that upper line in the sand, coming down. First target would be that bearish reference there, our lower line in the sand, and then a continuation to the downside here, and then a continuation further using our neutral references, right? But following our bias. If it doesn't hold and we break back up above it, then that would be a chance or an opportunity to continue with the upside heading into that 48.33 area. Now, if that clears out, once again, it's one of those important zones structurally that we're looking at here between these two bigger neutral areas. If that clears out, then we have a lot more opportunity to the bullish side of things today, heading up into that 48.80 type of stretch targets. So what essentially we have here, just looking at the entire landscape, is we have a bearish context overall, right? So that's what we're really monitoring. We are kind of looking a little bit more for like shorter targets in between these two neutral references around the 48.33s to 47.67s. But if we clear those particular areas out, we have some stretch targets that, are outside of that value that's accumulated in those zones. So overall, bearish in this line in the sand area here between the 4800s and let's just say the 4820, somewhere in that zone. Depending on your time frame, you could treat this as one area and look at that as an overall bearish area. I separated them simply because of time frame usage and things like that, which is why I'm mentioning it here in the DMI notes. You could treat this as one big area, but they are technically two different time frames with two different references that have just switched to being bearish for us with the overnight session. So that's what we're paying attention to with today's DMI. Two lines in the sand, both in bearish in nature, looking for them to hold. If they go up above, chances to scalp if they fail. But overall, we're sticking with our main idea or context here, which is overall bearish, especially down in that 47.67 area. And if we get below that, further continuation to the downside. If we don't and we start holding up above, we'll be monitoring for the bulls coming up through those lines in the sand. All right. So let's start off 2024 with some good trading, some solid process today. Stay focused on your risk control, and let's get after it. Let's have this year be a great one for us.